Welcome and thank you for joining us today for the program number 2 in our business webinar series. My name is Dan Bellier. I'm the Chief Workforce Development Officer for the Maine Community College System, and I'm fortunate to lead the Harold Alphons Center for the Advancement of Maine's Workforce, a program of the Maine Community College System. This center coordinates short-term training funds and programs for the community colleges and works closely with our business leaders and workforce specialists throughout the state. The center is deploying $62 million in public and private funds of no-cost workforce training to achieve the goal of training 24,000 Mainers over the next 4 years. The center launched in late fall of 2021 and speeds the delivery of critical training to both trainees and employees. The Harold Alphons Center will serve 24,000 Mainers, as I said, by 2025. And as of today, we have facilitated training to over 15,000 Mainers in the first 23 months of the center's launch. Our focus is in 3 areas: pre-hire training, so learners can gather the skills to enter a new position using federal funds through Maine Jobs and Recovery Funds. The second part is our incumbent worker training. This is upskilling current frontline workers through the Maine Workforce Development Compact. Our compact has almost 1,400 business members and serves and represents over 300,000 frontline employees. We're also in our third stage of offering those employees who have taken training half off community college courses. So again, I want to thank you for joining us. And at this time, I want to introduce our host, Dana Connors. As many of you know, Dana probably needs no introduction, but Dana is a leader in Maine and someone that many of us look up to. He has served as a city manager, commissioner of Department of Transportation, and long-serving president of the Maine State Chamber of Commerce. Dana recently retired, but we're really pleased that he is joining us in this series as our host. And he's still working on many projects to support Maine employers and Maine's economy. So thank you, Dana. Thank you for your continued grace and leadership. And now I turn things over to you.
Well, thank you, Dan, and good morning, everyone. Dan, those were very kind words, very generous words, but I do thank you for this opportunity to be a host for a very important webinar that's going to be presented to our viewers, our listeners today, one that really, whether you're an employer or employee, you're going to get tremendous value of it. And it's a chance to ask questions and to better understand. Like I said, it not only addresses a lot of the issues employers have, employees have, and our economy respects. But I do want to do justice to the webinar by putting an emphasis from the business community on what Dan has just said. And that is, as important as this webinar is, it is a key part, to be sure, of a greater initiative. That is what you just heard Dan explain. The Harold Alphons Center for Manufacturing, it would be for manufacturing for sure, but for Maine's workforce, is an incredible initiative that really is going to go far, in our opinion, in addressing Maine's workforce challenge. It places a key emphasis on training. He said it. It brings together short-term and other training and really sets a very ambitious goal that within approximately 3 years, 24,000, and we're over halfway there now by 2025, is tremendously significant and of great value to our economy. But that workforce development compact is one that I would encourage every business to look at and to consider, because you can get up to $1,200 for every employee for training purposes. And he said, and I emphasize, that training is focused on 3 pillars: that pre-entry level, the incumbent that you upskill, but also a scholarship opportunity for your either a certificate or a diploma. Yeah, there's a lot of very positive aspects. And the business blueprint, which is a series of webinars of which we'll be addressing just in a moment, is also of tremendous value, because it really does equip businesses with the tools to attract and retain talent. But it also supports the employee's success in their professional journey and gives them access to resources to make that journey even more successful. Yeah, I can't say enough good about the Maine Community College System and this workforce initiative that we now call the Harold Alphonse Center for Maine's workforce. I really give you tremendous credit for the actual commitment, the creativity, but also the leadership to bring this to pass, because it will go far in addressing our state's #1 priority, as our 10-year strategic plan points out. And that, of course, is our workforce. And as we all know, that workforce challenge really speaks to every part of our state, and whether you're a large or small business. So again, with great promise and hope, this plan is one that we are very, very appreciative to have in place, and we thank you for that. Now on to today's webinar, and a timely one at that. It is called Maine's New Retirement Savings Plan. And frankly, if you're a business with 5 or more employees and you're seeking ways to bring in new employees, but to also retain those valued employees that you already have, or perhaps you're a valued employee, or you have those valued employees who are worried about what happens after I retire. Will I have that financial security that I really need? Well, if any of that relates to you, then this webinar is spot on for your consideration and understanding. And to help us with that, we have 2 very outstanding panelists today to help us unpack the questions of what does it do? How does it affect me? What are the responsibilities that I have as an employer or an employee? These questions and many more they will address, and you will have the opportunity to expand upon that by giving you ample time for questions. Let me introduce our panelists. Elizabeth Bordowitz, she is the Executive Director of the Maine Retirement Investment Trust. We refer to that probably in the presentation as MERIT, because it's an acronym that really does speak to the trust itself and its purpose. She will be joined by Nate Moody, who is a retirement plan advisor and partner at Lebel and Harriman. Both are very experienced. For Elizabeth, her past experience, among other things, that she was a vice president for legal administration for the Foreman Acton Fund, and I also knew her as president and CEO of the Finance Authority of Maine. Nate, in addition to his retirement plan advisor and a partner at Lebel and Harriman, is also a vice president of the Maine Employee Benefits Council. And Nate has earned praise and recognition for his experience, for his skill and knowledge when it comes to retirement planning. That praise and recognition is both noted here in Maine, but on a national level. So you see, we have some incredible people to help you understand this very meaningful program. So Beth, you are the one that will kick us off. Thank you.
I am. Thank you very much for that introduction, Dana. I'm going to put our slides up for today, and we're going to get going. All right. So again, as Dana said, we refer to the program as MERIT, the Maine Retirement Investment Trust. And I'm very happy to be here this morning to introduce all of you to MERIT. And I want to thank the Harold Alphonse Center for the advancement of the Maine workplace and the Maine Community College System for inviting me and to provide this information to you. So what are we going to talk about today? First, a very brief look at the retirement landscape in Maine. Why did the legislature create MERIT? That's what we're going to answer with that part. What is MERIT? What does it mean for employers? What does it mean for employees? What is our implementation schedule? So what are the important dates that you as employers and employees need to be aware of? I'm going to answer some questions that I guess get asked all the time, and then I look forward to your questions I'm sure there will be many, and please bring them on. Feel free to put those in the chat, and we'll be looking forward to getting to those. And then after I talk today, so that's Nate will talk about the retirement plans generally and recent changes in federal law to retirement plans. So the retirement landscape in Maine, the reason the legislature created merit was there's just been a lot of acknowledgement lately that a lot of people do not have access to workplace retirement plans. And the workplace retirement plans are shown to be the most effective way for individuals to save for retirement. So there are ways to save for retirement outside of the workplace, but the regular contribution through a payroll deduction has been shown to be very effective. And in Maine, 41% of Mainers do not have access to workplace retirement plan. 207,000 of us do not have that access. So this program is created to fill that gap. And the gap is actually nationwide. So Maine is not the first to create a program like this. The program started for the first time in 2017 in Oregon. It was opened up in California, in Illinois. And since then, Virginia, Maryland, and Colorado have opened programs, as well as Connecticut, Vermont and Delaware, New York and New Jersey should all be starting programs in 2024 or 2025. So there are a lot of places across the country where this will be in effect. So it has been proven effective. We're not the first to do it. We're walking into a program that has proven effective in many places across the country, and there's currently nationwide about $1 billion in assets in these programs. So what does it mean for employers and employees? For employers, you will be required to register with Merit if you do not offer a retirement plan in the workplace, and that's a qualified retirement plan, which we'll talk about. If you have 5 or more employees and you have been in business 2 years. So all Maine employers, again, with 5 or more employees who do not offer a workplace retirement plan will be required to register with Merit. It will be for employees who are employed in Maine. So if you're an employer with employees in multiple states, only the Maine employees will be registered in Merit. They must be 18 years or older, and that's because we're opening a financial account for them. It's federal law. And again, federal law, they need to have a social security number. This is a whole list of qualified plans. If you have any one of those plans, then you do not need to offer Merit. And I'm going to pass over this quickly because Nate will talk about qualified retirement plans in his section a little later. Some of the key aspects of Merit is that it provides for automatic enrollment for employees. So employees will be registered. All of you employers who are on this call will register your employees, and then it will be up to them to opt out if they choose to. And they can opt out at any time, but it is an action that the employee will need to take. And again, it has been shown throughout the retirement industry that many more people will participate if they need to opt out rather than opt in. So that is the methodology that the state has chosen in its legislation. It will be an opt-out plan. It is a public-private partnership. The program is professionally managed and advised by Vestwell, a financial services company, and the services, the custodial services are provided by Bank of New York Mellon, again, a large custodian for accounts of this type. And our goal as the board was to make it as simple as possible for both employees and employers. The employer's role, you basically have 3 easy steps. Again, our role was to make it simple for you. So we would provide for fast and easy enrollment. There's no cost to the employer. The program charges no cost to the employer to set this up. And we make a big effort to work with your payroll processes so it can be managed in coordination with your existing payroll processors. There are some payroll processors that are fully integrated into Merit. Some have a 180 integration into Merit, but our goal is to get as many payroll processors involved as we can. And I've been working with many Maine payroll processors so that they're aware of the program and are trying to make their coordination with their clients as effective as possible. So I said a 1, 2, 3 process, 3 easy steps. The employer is going to register on our portal. They're going to send their contributions, and then they need to go to the ongoing maintenance. So the employer has no fiduciary obligation. The employer merely facilitates the program for the benefit of their employees. So some of the details, this is probably among the most detailed slides you're going to see, but they are all important. When an employee is automatically enrolled in Merit, we will be opening a Roth IRA for them. An employee can choose to have a traditional IRA, but the automatic default option will be a Roth IRA. 5% of the employee wages will be automatically withdrawn from each paycheck and contributed to their individual Roth IRA. That amount will increase 1% per year up to a maximum of 10%. So someone who joins the program in 2024 before June, in January 2025, their percentage will increase 1%. And the funds will be invested in first a capital preservation fund or money market fund, and after 30 days moved into a target date suite of funds that becomes more conservative as you age. So it is managed to coincide with your retirement date to provide a mix of funds that will change over time. Employees do have choices. Well, again, those were what will happen automatically, but employees can change basically any of those choices. They can opt out of the plan entirely. They can change their percentage of wages contributed. So that percent can be 1%. It can be 100% of wages. That's up to the employee. And the employee can choose their investment options. And in addition to the capital preservation fund and the target date suite of funds, there's a bond fund and an international equity fund. And employees can mix and match among any of the options. It's very specific. This is has a lot of detail on the slide, but this is going to give you a detail of how Merit will work in practice. So the program is receiving from the Department of Labor a list of all employers in Maine who meet the criteria of 5 or more employees and have been in business for 2 years. And so that's an average of 5 or more employees over the past year. We will, as the program, be sending each of those employers an email or a letter from the program, and there'll be a series of those. The first one will come in late January or early February, and that will have an access code and a link to our website, meritsaves.com. You'll go onto that website. You'll upload your roster of eligible employees right into that portal. And then the employer's job is done for the next 30 days. It's up to the program. We will contact your employees. We will send them 3 letters in that. Oops, sorry about that. We will send them 3 letters in that 30-day period. I'm going to go back to that slide. And we will, and they will be advised of their options. They will be advised that if they do nothing, what the default options are. They will be advised that they can customize their account with different investment choices or different amounts of contribution, or they will be advised that they can opt out. Employees will be able to do that on the portal, and they will also have a phone number they can call to opt out if that's what they choose. After those 30 days, we will reach back out to the employer and say, here is your list of employees who are enrolled in the program. So maybe an employer uploaded a roster that has 10 employees on it, and there are now 9 left, and one is contributing 4% and one is contributing 7%. All that information will be sent to the employer. The employer will then begin initiating the payroll deductions. So that will come right from the employer. And again, we will provide that information to employers. And one question that comes up a lot, we will also provide any changes. So if, let's say, the next week after being in the program for 2 months, some employee decides to opt out or to change their investment options, we notify the employer about that. So the employee is not going to the employer with those changes. They are coming to the program with those changes. They aren't frequent, but they do happen. And we are the ones who let the employer know. This just gives you an example of what the meritsaves.com employer portal looks like. So you can see 3 easy steps. Your first step will be to add your company information. Then you'll set up your payroll, which means setting up how often do you make payroll? Is it every month? Is it every week? Is it every 2 weeks? Is it on Tuesday, Wednesday? That's what payroll setup means, just getting that information available. You'll set up your payment. That will be setting up a connection with your bank. You can set that up as an ACH push, an ACH pull, or choose to send a check if you'd like to. And also, then you'll add employees, which is what this screen is. And you can see you can upload a file. So if you have a file of your employees with the data, you just upload that and it will fill in the roster on the site, or you can enter, if you have a small group of employees, you can enter them manually. And there is a template, again, on meritsaves.com that you can download from your payroll or other HR information that you have, download into that template, and then upload it right into the portal. So it can be very quick. The portal is very intuitive, easy to use, and meritsaves.com has multiple a help section available with videos and step-by-step processes in case you need it, but it is pretty straightforward. One key element, again, payroll providers are important, or a team might want to have multiple people like their HR manager and the owner, and maybe a payroll person if you're bigger, to be a teammate. So you can add a teammate at any time. Again, that can be your payroll processor. And if you've added a teammate, that means all information about changes to your employees' accounts will be sent to all members of that team. So everyone will get that email. Those teammates can access and edit the payroll and the employee information in the employer portal. So that's up to everyone to add teammates. Teammates can be removed. It's, again, pretty straightforward. I want to just mention some key dates. Our pilot has started. We started October 24th with the first Maine employers entering their employees into the program, or actually our first accounts were funded last week. So the pilot is rolling along. We had 14 employers who participated in the pilot. They range from land trust in Ogunquit to a daycare in Presque Isle and pretty much everything in between. We have restaurants, we have inns, we have a temporary agency. So many different types of businesses have worked with the pilot. We've certainly learned. We've made some updates and enhancements to the website, to the portal, to make sure that it's working for everyone. January 2024 is when you are going to start receiving those letters from us. That's employers will start receiving their first letter late January, early February. It'll be sent to all employers in Maine, advising them to, giving them their access code, letting them know about merit, and employers will receive additional letters prior to the deadlines that are coming up. The April 30 deadline, employers of 15 or more employees will need to be registered with merit. So employers of 15 or more, according to our records, will receive additional letters prior to April 30th. Employers of 5 or more employees need to be registered by June 30th. And again, they will receive letters just prior to those dates, as well as reminders. Some questions that I get regularly. So I want to address them now. And of course, I'll be happy to address any additional questions that you have. So seasonal employees, the way it will work is seasonal employees will need to be registered with merit once they've worked for 120 days. You can register with merit on day one. So the day you onboard your employees, please register with them with merit on the day you onboard. But if you know that someone is going to be there as for seasonal work of 60 or 90 days, less than 120 days, they do not need to be registered until they've worked for 120 days. Part-time employees do count toward the 5 employees and will need to be registered. And that's important because a lot of part-time employees are in a position where they do not have access to workplace retirement. And this account belongs to the employee and it will go with them. So if someone is working perhaps at 2 part-time jobs, they might be able to participate with merit at both of those jobs. Or they'll have the choice to choose with one job or not the other job. But the account will move with them and give them an opportunity that they may not otherwise have. And temporary employees will also count toward the 5 employees and need to be registered if they are W-2 employees. So if you're paying them a salary on a temporary basis, they will also count toward the 5 employees. There are people who offer a qualified plan to some but not all employees. And if you do, you are exempt. So even if your plan is not available to all employees, you're still exempt as an employer if you offer a plan. And if you are exempt, then you will also hear from us. You'll get an access code and it'll be a very quick process for you to exempt. You'll go onto that meritsaves.com website to the employer location. And instead of registering, you'll say register my exemption. You'll click on that. The next screen will give you some radio buttons as to why you're exempt. It could be because you have a qualified plan. You press that radio button and you are done. So just a couple of minutes if you are exempt to just make sure that status is clear to us. If you're a business owner, you will count toward the 5 employees and have to participate and be registered with merit if you receive wages. So if you only take a draw or are paid some other way, don't take salary, then you are not counted toward the 5 employees. Do not register with merit. But if you take any W-2 wages, then you do register with merit. And employees who opt out can opt in at any time. So maybe at the beginning of the program, it's not a good time for them to participate, but then a few months later, their circumstances change and they see that they want to participate, they can opt back in and start participating in the program. And of course, the program will let the employer know about that. So that was a pretty quick run through merit. That's my part. I just want to highlight these, particularly the meritsaves.com website, which is the portal that employers will be using. And you can get a lot of information from there. And I'm going to turn things over to Nate.
Awesome. And I guess Dana and Beth, there was quite a few questions that came in specific to the merit program. Do we want to hold off and cover those after my section, or do we want to run through some of them?
Yeah. Why don't we hold off? You're
Okay.
right. There are a number and they're all very relevant to what's been said, but let's hold off because some of them might be answered by what you have to offer, Nate. So.
Okay. Beautiful. Well, thank you, everybody, for attending. I'm actually incredibly impressed with how many people were able to get switched over. So kudos to all of you for that. My name, just as a quick reminder, Nate Moody. I'm a financial advisor focusing specifically on corporate retirement plans at a firm called Lebel Harriman. We're based right in Falmouth, Maine. It's really our core focus. Super excited to be here today because for anybody who knows me knows I love talking about retirement. I know it's not everybody's cup of tea, but I think this program is really important for 2 reasons. One is obviously increasing access to Mainers for workplace retirement, and access when it comes to saving for retirement is 9/10 the battle. But the other thing it's doing is it's getting retirement to be front of mind, both for employees and probably as importantly, if not more important, for employers in Maine businesses. So if we flip to the next slide, what we're going to cover in this section is understanding for anybody who wants to use this as an opportunity to start their own retirement plan, as opposed to maybe using the merit program, what your options are and what some of the pros and cons of doing that look like. So why start your own plan? Well, typically most employers have kind of three main goals when they're considering starting a plan, or if they already have a plan in place. So first and foremost, it's helping prepare your employees for retirement. We're going to talk about things like a simple IRA or 401k plan, but they allow significantly more employee contributions than what you're going to be able to do through an IRA. And that's just the way that the tax code is written. Second reason is that I think anybody who's on this call can appreciate, particularly here in Maine, is with the tight labor market nowadays, especially with the workforce shortage here in Maine, retirement plans are no longer a nice to have. They're quickly becoming a have to have if you want to be able to recruit and retain all these skilled employees coming out of the Maine Workforce Development Compact. And then finally, there are some really significant potential tax benefits to businesses and specifically business owners that start a plan. And we can cover some of those a little bit later. But that being said, there are some important considerations, recognizing that businesses are on a budget, right? They don't have an unlimited budget for employee benefits. I think because of some recent regulations that have introduced some pretty lucrative tax credits for small businesses that are starting a plan for the first time, I think you'll find that a lot of corporate retirement plans are much more budget friendly than you might have initially thought. Second piece is probably the biggest hurdle we see, particularly with small businesses, is the administrative burden. And this is true of any employee benefit, right? A lot of small businesses don't have an HR team. They don't have a benefits team. And so it falls upon them, their spouse, their bookkeeper to help keep track of this. What I will say is this is a really good opportunity to leverage the compact program. The Maine Community College system has phenomenal business administration and HR classes, and this is a great way to identify a motivated employee, upskill them in this arena, and add a ton of value to your employees and to your organization. The other thing I'll say is not to get sappy, but retirement plans are truly one of the most rewarding things you'll work on at your organization, because you're literally helping prepare and shape the retirement of your peers, their families, their kids, the next generation of workers at the company. And so I know for anybody on here who's an HR person can attest, they're at times probably feel like more headache than they're worth, and nobody ever thanks you for the work you do, but it's just such an important benefit and program for an organization to offer. And I truly believe that the reward and the gratification you get is well worth any additional overhead. And then the last piece, controlled group. So in Maine, a lot of people own multiple businesses. It's just important to understand there's some specific rules around that. I won't bore you with controlled group rules today, but if you ever have questions on them, you can always reach out. So we can jump to the next page here. So it's important to understand sort of the two main, sort of retirement programs we're talking about today. You have your individual based plans, which are really not what we would consider an employer sponsored plan. And that's going to be what Merit falls under. And then you have your employer sponsored plans, which many of these are probably fairly familiar to people on this call. You have your SEP IRA, your simple IRA, 401k for for-profit, 403b for not-for-profit, and then you do still have defined benefit plans, although they're not nearly as common as they once were. Jump to the next page. What are some of the benefits to the individual program like Merit? Well, from an employer perspective, very limited oversight and involvement, very little administrative burden, no fiduciary liability, and then low, and in this case, really no cost at all to you as an employer. From an employee perspective, portability, a really nice feature. So if you move from one employer to another, you can still access and contribute to that Merit program. For anybody who's ever had to do a rollover from one 401k to the next, we always joke it's right up there with like going to the DMV. They make it so complicated that it's really nice benefit on the individual side to have that portability. From an employer side, what's some of the downside? Well, now everybody's going to be able to offer Merit. So it really doesn't differentiate you from one company to the next if you facilitate Merit. Whereas if you started your own plan, that would be a nice differentiator when it comes to recruiting and retention. Plus, because Merit's not an employer-sponsored program, it's not eligible for those tax credits at the employer level. And then at the employee level, the contribution limits, I say low, I guess low is probably a relative term for a lot of people, but they are lower than what you could contribute often to a simple IRA or 401k. Jump to the next page. Employer-sponsored plans. So, all the advantages are basically the opposite of the disadvantages we covered in the last slide. So I won't really spend too much time here. We can kind of jump ahead, I believe, 2 slides. I think the next one is a summary of merit, which Beth has already done a phenomenal job of. And we jump one more page. I think this might be helpful to understand how merit stacks up to sort of 2 of the most common defined contribution employer-sponsored plans that we see. So when it comes to employer eligibility for merit, it's really any Maine employer. It's obviously required for what are considered covered employers, but theoretically, any Maine employer could either opt in on a voluntary basis, or they may have to help their employees who might sign up on a voluntary basis. A simple IRA is really limited to small businesses, which in this case, the IRS is defining as less than 100 employees. And then a 401k and a 403b, which again is like the nonprofit equivalent of a 401k, are really available for any employer. When we look at employee contributions 2 lines down, this is where you start to see some separation between an employer-sponsored program and the merit or individual program. Here, you're limited to just what the IRA contribution limits are for that year. So for next year, they did go up. There are $7,000 plus $1,000 catch-up if you're age 50 or older. Whereas with a simple IRA, you could do up to $16,000 pre-tax and or Roth. And then finally, with a 401k plan, which is sort of like the Cadillac of retirement savings vehicles, here you're able to save up to $23,000 a year next year, plus an additional $7,500 catch-up. So again, for those business owners or higher income employees, significantly higher contribution limits under employer-sponsored program. Employer contributions, so merit, again, is an individual program. So not only are employer contributions not required, but they're actually not allowed. So you don't have to provide a match or contribution. Whereas with a simple IRA, you are required to provide an employer contribution. Usually it's one of 2 formulas, a match or a non-elective. Non-elective is basically another way of saying everybody who's eligible gets it. And then the 401k, you get a little bit more plan flexibility. So you do not necessarily have to make an employer contribution, although there's often a lot of really good reasons for why you might want to. Last couple things I'll cover here. I want to leave time for questions. 401k, definitely more compliance and administration. Or I should say any defined contribution employer-sponsored plan is going to be a little bit more overhead than what the merit program is. And that's one of the really nice benefits to the merit is, as Beth mentioned, it's simple, it's easy, and it's for those companies who might not be in a place to start their own program to make sure their employees are still getting up and running. Next page, I won't cover in detail, but I just want to remind people that under Secure Act 2.0, I promised Beth I wouldn't start talking about retirement legislation this early in the morning. They did significantly increase the tax credits available for small businesses starting a plan for the first time. And those credits could be up to 100% of the plan cost for each of the first 3 years it's in existence. Plus, they introduced a new tax credit, which is different than a tax deduction. Tax credit's a dollar for dollar offset in your tax liability. And they introduced a new one if you also provide an employer contribution for the first time. And it's not an insignificant amount of money, up to $1,000 per employee per year. So really some phenomenal tax credits in addition to the normal tax benefits around retirement plans. And jump to the last page here is a kind of a little decision tree to help you understand what might be a good option for you. So if you have more than 100 employees, it really comes down to what your priorities are. If you want limited employer involvement, you want no fees, then the merit is probably going to be the right program for you.
Right.
If you want, whoops, that's all right. If you want to give your employees the best possible contribution amount for retirement and you want to be able to recruit, retain employees, you might want to consider a 401k. If you have less than 100 employees, then you have a couple different options. You could go the simple 401k, 403b, or merit. And again, you can go through that. And the last slide here, I'll finally stop talking, is resources. So for any individuals on here who are really jazzed up about financial wellness, like we have a ton of free ongoing financial wellness resources. We have both a monthly webinar series where we feature local Maine professionals to cover a range of different topics. We also have a newsletter. And then finally, for any employers on this call who want to consider starting their own plan or just want to understand what the cost would look like, or even if you have a plan already and you want a little bit of insight on potential improvements, bunch of resources here. And I know that these slides will be getting sent around. So again, try to run through that as quickly as possible. I chugged a couple of cups of coffee so I could talk fast. Want to open it up for questions, or I guess I should say hand it back over to Dana, who I think will moderate the next section.
Thanks to both of you. Exceptional job. And as both of you have mentioned, and actually Heather has put it in the chat room as well, that you will be receiving a copy of the recording and the resources that have been mentioned on this program today. And so please be willing to share it with your colleagues or counterparts who also may benefit. Heather and I have both received a couple that probably have been addressed in part. So Heather, you want to do what you've received, and we'll try to get through as many of these as possible, and we'll stay on as long as we need to.
Absolutely. We have an organization here that hires seasonal employees, some who are only 16 to 18 as well. Others within this organization are only with the company for 4 to 6 weeks. Are those two groups, both the ones that are there for about a month and 16 to 18, are they eligible under this plan?
So the ones who are there for a month are eligible. They can, although if they're only there for a month, it will be impractical just because they all have 30 days to make a decision. Now, what I would say is if they come back annually, it might not hurt to register them. They could then start the next year when they come back right on their first day of work. So it's an opportunity for retirement savings. With a lot of seasonal workers in Maine will come to the same job season after season. And so that's a really good way to offer them an opportunity for those people. For fewer, but it is not required to register them because they would not have been there 120 days. Okay. For anyone under 18, they cannot have a merit account, but the 18-year-olds certainly can.
And on that front, I believe you covered that the employee can take their plan with them. If an employee moves on, what is the responsibility of the employer with that account?
So the employer doesn't have a responsibility. They'll obviously stop making the payroll contributions, so there'll be no payroll. And then the plan will be the employee. So if the employee has moved to another business, another employer that offers merit, they can start on day one contributing to the same account that they had already been contributing to. And I'll say if you're part-time, you might have 2 jobs, you might have 2 different merit accounts. So, I mean, you'll have one merit account contributing from both jobs.
Are owners included in the employee account?
If they are W-2, if they pay themselves W-2 wages, then they are included in the employee account.
What will the cost to the employee be other than the payroll deduction?
Great. So there is, we have tried to keep this as low cost as possible, but there is a per account fees are taken from the account balances for employees. It is an annual flat account fee of $26, of which most portion goes to our financial services firm that's running this, and some comes to the state to help sustain this program. So the $26 flat fee and 20 basis points for based on the assets under management. So 20 basis points based on the account fee. And I'm actually going to double check the 20 basis points. It's either 20 or 22. And then the underlying fund fees range from like 3 basis points to 10 basis points. So those are very low. And I want to confirm the annual account fee. I believe it's 22 basis points.
Okay, we'll include that in the email that goes out as well.
Yep.
What is the notice process to inform companies of this new requirement?
So the notice, again, the letters will start going out in late January, early February, and they will have, employers will receive either 3 emails or or 3 letters, depending if we have their email address or not, prior to their required date for registration. They'll also start receiving, if they miss that date, they'll also receive a series of letters. So the information will be sent directly to employers, and it will have their access code, and it will come by email or by letter and be from Merit.
Thank you. There's a question here about employee education on general financial information, but I think Nate shared some great links at the end, so I'll make sure that those are included in the email as well. Can you still participate if you have less than 5 employees?
This time, no, sadly, because I've had many employers who would like to. We are going to figure out a way to get there. So it might be changing the legislation, but we know there are a lot of really small employers who would like to participate. And so not right now, but hopefully soon.
Okay.
Beth, can I ask actually a quick follow-up on that?
Yes.
If an employer is above the employee threshold but is otherwise exempt because they offer a qualified plan, can they participate, and or can their employees voluntarily sign up for the program? Or is this only going to be for employers that are required to do it?
Right now, only for employers who are required to do it. However, employees can voluntarily participate. It would just not be through payroll deductions, but they can set up an IRA through Merit and do automated contributions from their bank account or however they want to do. They can do checks, but of course, a better process to set up automated contributions, so they can do that as well.
If an employee already has a Roth, are they able to opt out?
They can opt out whether they have a Roth or not. An employee, it's the employee's money, and they can choose to opt out for whatever reason, is appropriate for them. They get to make that decision and opt out at all, completely. Or they can roll their Roth over into Merit and continue contributing to their Roth, move it into Merit and contribute that way.
Great. And if an organization uses a payroll company, QuickBooks was mentioned here as well. Will this program integrate with that?
QuickBooks has a 360-degree integration. So people using QuickBooks or Gusto, I think Paylocity, all have 360-degree integrations. And then when you register with Merit as an employer, there is a long list of payroll providers. They actually ask you for your payroll provider. And if they are on that list, you can click on them, and just so that we have that information. And if they are not on that list, you should also put other down and put your payroll provider, because if there's a lot of people with a payroll provider, it will help us move forward to doing the integration with that payroll provider. And I've been trying to reach out to all the payroll providers in Maine and letting them know, here's how you do the integration, start early. So at least a couple of the main payroll providers have started early and have their integration ready. They were super helpful in recruiting some of our pilot companies, because they wanted to see how it would work for them and make sure they're ready for their clients. So the payroll providers, a lot of them they're pretty aware of it and have been trying to make sure they know how they're going to integrate this into their other activities for their clients.
Great, thank you.
Can I ask you a question? I thank you very much, Heather, for taking this on, because I have lost, I don't know if you can see me, but I can't see any of you, and I've lost the chat room capacity. So thanks for doing this. There was one that I'd seen early on, and you may have already asked it. It was in reference to having a plan and whether or not it was a type of plan that was special retirement, and whether or not they had to enroll in the Merit. Do you see that question?
I do, and I'm happy to take that one, Dana.
Okay.
So it sounds like this person has a qualifying plan in place, and their question was whether they'll have to automatically enroll their employees into their own program. So that's a separate question from Merit, and Merit wouldn't impact that. It really depends on how your plan is currently written and to what when it was created. So there is a new law that requires that for any new retirement plan that goes into existence, like a 401k, 403b, does have automatic enrollment. So that's kind of where the industry is going, and it's not necessarily specific to Merit. But good question. Happy to help if you want to follow up after this call on your specific program.
Here's another question that may have been asked in that so-called dark period there, but have there been any are there administrative fees that will be assessed?
So we will not be assessing any administrative fees to the employers. The employees will pay small account fees. Again, $26 flat fee and an asset-based fee based on the assets in the account. Yeah. So when we and the board, of course, was really focused on making sure that these were low cost, and our research shows that even compared to other state plans, because Maine did a partnership with Colorado, frankly, we have lower cost fees than bigger states like New Jersey. And we also compared to, let's just say, other plans like a 401k, our fees for employers, they're zero. So of course, lower than the 401k, but even for employees, our fees are either consistent with or lower than most 401k account fees.
I know this, again, I apologize, you may have answered this, but I'm aware of a pilot program to be able to assess and to learn from it. Has that been established? And if so, what's your takeaway from that?
The pilot's going great. It's been really helpful. We had 12 to 14 employers, and I say that 12 to 14 because there was one individual who was registering 4 companies, residential care facilities, and so she is still in the process of getting the information she needs. So what we've learned, we've learned that employers like it. They were anxious to participate. We've learned that the employees who are in the pilot like it, and again, are already contributing to Merit. And we also were able to watch the functioning of the system and just make sure that it was working properly, which it is now. So there were, we learned a few things that we wanted to tweak on the website, and we have done that. And so again,
I just got word that this program is going to be cut off in about 4 minutes. And if that's accurate, I should at least be sure to thank the 2 of you. Outstanding job. And certainly all of those who participated today and had to weather the technological changes that took place. We're grateful that we were able to get back on. Some of us a little later than others, but here we are. I hope you've enjoyed the program and got something out of it. And recognize that every month the Alphon Center will explore a topic that impacts Maine's employers. And we hope you will join us in January for how artificial intelligence can change your workplace in 2024. And if you're looking for resources or other information, please know that AARP or FAME, Finance Authority of Maine, on their website will give you some resources. Nate mentioned a couple, and so did Beth. To be sure that if you have any questions or anything of that nature, and please, if you're a business, don't overlook that compact, because you will be eligible for up to $1,200 to train an employee, every single employee that you have within your ranks. So again, I thank you for your participation and look forward to when we can do this again. Take care.